welcome to Zee Commodity Capsule. Let's start with precious metals, which have retreated on Thursday as geopolitical tension and safe haven demand ease after US President Donald Trump backed down from the new tariff threats and the proposals to annex Greenland by force. We saw gold prices scaling a new peak of $4,890 an ounce in the previous trading session, but by the time it settled, we saw it scaling down by nearly $90 an ounce, and on Thursday, we saw it trading nearly $100 off its life high. We saw dollar also firmed up closely, trading near 98.5 mark, while the benchmark 10-year US Treasury yield eased off the multi-month highs. Meanwhile, we saw the Wall Street indices also jogging higher on news of Trump's reversal on tariff, which is why we saw gold losing some of its sheen from record high. Having said so, Goldman Sachs raised its target for end 2026 gold price forecast from $4,900 an ounce previously to now $5,400 an ounce. Silver prices also paired early declines to trade near $94 per ounce on Thursday. COMEX silver retreated from record high levels above $95 an ounce on January 20th as US President Donald Trump's latest statements eased the market fears of a deeper geopolitical and trade dispute over Greenland. Oil prices edged above $65 a barrel on Thursday after US President stepped back from the threats to impose tariff in his effort to seize Greenland, reducing the risk of US-Europe trade war and supporting the global economy along with the oil demand. We also saw crude benchmarks climbing on Tuesday by more than 1.5% and by more than 0.5% on Wednesday after OPEC Plus producer Kazakhstan halted output at two of its major oil fields on Sunday due to power distribution issues. Copper prices are largely range-bound on Thursday after inventories in US COMEX approved warehouses rose above 5 lakh metric tons for the first time ever amid lingering tariff concerns. Copper on London Metal Exchange ticked above $12,800 a ton. We saw copper continues to be supported by supply concerns due to mine disruption and the tariff-driven inflows to US, but demand amid high prices has been a matter of question. Malaysian palm oil futures rose for third straight session on Thursday, hovering near 4,200 ringgit a ton mark and reaching a 7-week peak. Strength in edible oils on the Dalian and Chicago markets boosted the sentiment alongside the bets of firmer demand ahead of Lunar New Year and Ramadan in the month of February.